Today I have Vuyo Ntoi in studio with me today. Vuyo, thank you so much for coming to have a conversation with me. Co-managing director of Africa Investments Infrastructure Fund. Very exciting to talk through your journey, and we can take the discussion from as early back from UCT. Let's talk through that and what you studied, and we'll transition into your current career.
Okay, thanks. Great pleasure to be here and talk about my journey and what I'm focused on at the moment. Obviously my journey started at UCT many years ago. I was an economics and finance major, and literally got into the investment industry by I think I wrote about I lose count these days and forget how many letters I wrote.
I remember seeing a video
more than 40 letters.
40 letters.
40 letters to different asset management companies.
Yeah.
So I'm a keen youngster who's really keen to get into the industry, and I'll work for nothing just to get experience. And kind of 2 or 3 of those firms came back to me and wound up getting a role at one of them, IPAC, which was sort of the investment and research team of a small financial planning business in the Brait Group. And that was my start in the industry.
So obviously from there you wanted to find something a little bit more, that had more meaning to it. That led to your transition into where you currently find yourself. And I think 20 years in the industry, 20 years plus, is, an incredible inspiration to a lot of people who go and transition into that space. So do you want to talk me through that, how you found yourself into that next role?
Yeah, so I wouldn't say, I think what I was looking for was tangibility. So in some ways, my role at IPAC was still kind of had a high level of tangibility in the sense that I think we were pioneers in what was called lifestyle financial planning at the time, which was building portfolios that targeted certain real returns so that retirees could meet their financial goals on retirement.
Yeah.
And, it was quite kind of novel at the time. It's kind of now mainstream to do that from a financial planning and investment management perspective. But still, I think the role was very academic. It was around kind of optimal asset allocation, etc., and really transfers where one didn't necessarily see, where the money that was being invested from investors was going. It was in kind of listed shares, etc., rather than actual assets in the ground. So when the opportunity to enter into a private markets business, and at the time, a friend of mine was one of the early members of Old Mutual's infrastructure business, and she said, "Look, we've got an opening for another kind of analyst / portfolio manager in our business." I met up with the team, and the rest is history. So this was 2003 when that meeting happened, and August 2003 I joined the joint venture that Old Mutual had with Macquarie, which was the AIIM business, and it's been a 22-year journey to date. So a great learning curve, and
can we talk
great
about
growth curve as well.
Absolutely. Can we talk about AIIM and what primarily its focus is? I know that there are 2 distinct areas within AIIM that you do focus on. Do you want to touch on both of those for me?
So AIIM is kind of an infrastructure private equity manager, and we sort of delineate between the 2 sides of the business on the basis of where the funds operate and who they raise money from. So the first kind of part of the business is a very South Africa-focused business, which raises capital from South African pension funds to invest in mainly South African infrastructure assets. And this is a fund called the AIIF4 Fund. It's kind of a large private markets fund, perpetual capital vehicle, currently sitting at around 30 billion rands from a assets under management perspective. And the fund has been around for almost since longer than I've been with the AIIM business. It's kind of been a pioneer investor in multiple infrastructure investments in country. So it was an early investor in the long distance toll routes, a couple of the early PPPs. It's kind of evolved into a large investor in renewables, probably still the largest single investor in South African renewable energy. It's invested in digital infrastructure as well, through some fiber investments and a number of other areas, including cold storage and ports and logistics as well. The other side of the business.
Can we talk about the retirement fund space for a little bit, if you don't mind, before moving on to the other side of the business? So how do you, as if I'm sitting on a board of fund and I'm a trustee and want to invest in something like the Ideas Fund, how do I engage with you? What does that look like? And how do you then convince the board that this is the right type of investment to put pensioners' money in? Because there is huge risk locally within South Africa investing in new projects or infrastructure. What are your views on that?
Well, I'd argue that there isn't great risk. I mean, obviously, if your fund manager is experienced and knows what to look out for in terms of the risk profile of infrastructure projects, then I don't think there's too much of a challenge from a return and risk perspective. And in fact, South Africa is relatively benign from an infrastructure risk perspective. Obviously, kind of the normal risks come into play, construction delays, community issues, etc. But I think if you are managing those things well, you've got a strong ESG and social practice that ensures that your projects are acceptable within the communities in which they operate, that shouldn't be too much of a concern. I think in respect of pension fund trustees and their decision making, I think obviously pension funds exist to provide their investors with an outcome. Infrastructure investments have a specific risk return profile, which is longer term. It's highly yielding. So exactly the sort of profile you're looking for when you've got long-term pension fund investors. So I think it ticks those boxes. Secondly, there's the issue of liquidity, because a big concern among pension fund trustees is that their money is locked in. I don't want to market the fund, but because of the amount of time, number of years that the fund has been running, we've been able to innovate and ensure that there's a high level of liquidity for investors, with kind of notice periods and withdrawal basis that is market beating. So I think then your
board some comfort.
Then your infrastructure investment is more akin to some of your other investments in bonds and other spaces that pension funds are familiar with. However, obviously, kind of we're still disappointed with the level of kind of alternative allocations within the South African pension fund market. Currently sitting below 2% relative to an average of about 8% in OECD countries. And in places like Europe, I think the numbers go all the way up to 20% in terms of alternative investment allocation. So,
and I think with changes in Regulation 28, and I know you're instrumental in giving some insights to that, to say, like, how do we change those limitations that have been regulated in place, so we allow funds to diversify their portfolios accordingly within the limits of Regulation 28.
Yes. So I think the changes to Regulation 28 have been a good start. So pension funds are now able to allocate more towards private markets, but still pension fund trustees are kind of risk averse, and they don't want to be kind of the first to let's call it take a step into the unknown.
Absolutely.
So it's really about education and convincing and showing pension fund trustees how other pension fund trustees who've taken the step in the past are benefiting from having an infrastructure allocation in their portfolios. So, we've got a great story to tell, and we're at all the pension fund conferences telling the story around the success of infrastructure investment. And I think, and the South Africa story is a great one. The opportunity set is massive. First of all, due to government initiatives, but also, sadly, also as a result of government failure in certain industries. So because of certain elements of government failure, the opportunity set for the private sector is that much greater. But again, it's South African pension fund money being used to build out South African infrastructure, which makes sense. Essentially, South African retirees are providing for the infrastructure that's required for their families and descendants to live in a well-resourced country with proper infrastructure.
Thank you for that. So leading on to the second aspect of AIM, do you want to talk through that with me?
Yeah, the second aspect of AIM is one I played quite a role in many years ago. So it's a Pan-African business. So in about 2010, we raised our first Pan-African fund, i.e. A fund with a view to investing predominantly outside South Africa. And we raised dollar capital. And this was mainly from development finance institutions, international dollar-denominated pension funds, as well as sovereign wealth businesses, sovereign wealth funds. So that's the other leg of the business, and we kind of invest in infrastructure opportunities across the continent.
Currently, you have 4 funds under management.
We do at kind of varying levels of maturity. But our current fund that we're investing is called AIIF4. It's a $750 million base allocation fund with an additional $200 million of co-invest, so $950 million raise.
And kind of our most get that money
successful raise to date.
Yeah, let's talk about that. So I know the focus is mainly you want to look at domestic funding, but I think on those numbers, it's very difficult to, fund it domestically. So you'd have to go to international markets for that.
Yeah, so it is mainly development finance institutions, and call them the alphabet soup sometimes. It's kind of the likes of the AFDB, the IFC, FMO, kind of multilaterals, and kind of single country development finance institutions. It's sovereign wealth funds from kind of the East, from the Middle East, etc. It's also private investors, so European private capital mainly, which has been aggregated by kind of large insurance companies with a view to kind of investing in something with a slightly differential risk-return profile. So lots of interest.
To Africa, hey, it's not just South Africa locally. You investing in infrastructure
across the continent. Yeah. So investing across a number of themes that speak to, well, kind of let's call it global macro themes that drive the advantages of infrastructure investment globally, but kind of very, very, very pertinent to Africa. So at the moment, the tailwinds are around digital infrastructure, where you're seeing growth in data demand of more than 40% per annum. So data centers, fiber, etc., are a key opportunity set for us. Similarly, on the renewable energy or energy transition front, the continent continues to be a place where kind of north of 500 million people don't have access to clean and reliable energy. So the opportunity to provide that energy is a big investment opportunity. The way we play it, though, is mainly on a B2B basis. So we're a commercial and industrial power supplier. And because of the lessons we've learned, we're We've learned that doing power deals with local utilities and governments isn't necessarily good business outside of certain markets. So in that space, we're a commercial and industrial power provider. We contract with companies who tend to be a better credit risk than governments and utilities. And then the other macro tailwind is in respect of urbanization, population growth, and the need for services.
A lot more people are coming.
Exactly. Speaks to transportation, speaks to logistics, etc. And we are investing against that macro theme as well.
Do you feel that investing in companies that are startups and you build it from the ground up is key?
It depends on your risk profile. So, and I'll speak to something that we're doing within our Pan-African business at the moment as well. Is we are in the process of raising what we call the African Transition Acceleration Fund, which is an energy transition fund, providing early stage capital to developers developing renewable energy projects. So again, it's almost VC for infrastructure, where you fund the development stage of projects with a view to creating the sorts of pipelines that kind of some of the more mature funds can then take on at a later stage. And that's critical. I mean, if you don't have startup capital, the pipeline or opportunity set for more kind of capital that's seeking more mature opportunities never arises. So the opportunity to play there was a good one.
And obviously your role as chairman at SAVCA also plays a role in the venture capital space. If I had to say to you that venture capitalist in South Africa is something that is almost dead and we don't see a lot of it, what would your reaction be to that?
No, I'd differ. I mean, if you look at the latest venture capital survey, speaking specifically to 2024, you'll see that kind of deal flow increased significantly. I think north of 20% over the course of the year. So it's growing, but off a very small base. I agree. So
we've seen a lot of it in the markets in the US and the UK, where a lot of VC firms are growing within that space. And I think one of the things, and maybe you can talk around it within South Africa, is that we think a little bit too small. I don't think VC, will happen just within South African borders, and we need to think, bigger on an international scale. What are your thoughts on that?
No, I agree. I think the VC survey from South Africa, for instance, showed an industry of kind of 13 odd billion rands. From a balance sheet perspective, with deal flow of 3.2 billion rand last year, of which 2.6 billion was in equity and 600 million odd was in venture debt. I think the market is quite small. I mean, the US market is $200 billion. Our market is less than 0.5% of that market. So it's a small venture market. I do think, however, there's some aspects that are not necessarily captured in the South African numbers. Maybe we need to think. I think there's a large chunk of venture businesses that, in the first instance, register their IP offshore, right? And they raise capital internationally. So it's not necessarily captured in the numbers that speak to South Africa's venture environment, but I think there's lots of venture work happening. It's just funded from outside South Africa, and the IP is held offshore, so it's not necessarily captured in the numbers. And you can see that from Stellenbosch, etc., as an ecosystem, kind of belies the fact that the market is tiny. So I do think that there's lots of venture work happening. The other element of venture that probably doesn't get captured quite well is there's actually a lot of venture capital that's coming from corporates in kind of balance sheet development of ventures, which might also not necessarily get captured in the numbers. Although obviously SAVCA does look to delineate between independent VC funds and kind of internal venture generation. But I do think there's an element of internal venture generation that's not getting captured in the numbers. That being said, South Africa, relative to its GDP, relative to its ecosystem, does on a headline basis seem to be underperforming relative to other parts of the continent. But I do think it's the effect of people holding their IP offshore and of international venture funding, which isn't captured in the numbers. And yeah, you'll all of a sudden see South African entrepreneurs talking about kind of businesses that they've developed. The guys are based in Cape Town, but they're not part of the general figure. So I think there's a kind of an element of the ecosystem that doesn't necessarily get captured, but I think there's definitely value in looking at that institutional market and looking to fix it so that kind of more capital can go into new startups, which is what we need.
Absolutely. I think if we look at what and how capital is raised in South Africa, it's normally just someone who you know, or that, you know, angel capital startup that goes into new businesses. It's not really private equity money that's going in per se, but we understand the political landscape, geopolitics, the tariffs that have come in. Have you seen any insights from that and what the impact would be, you know, on Trump tariffs and what that looks like for South Africa?
Okay, I'll start on the venture side. I think South Africa's venture market tends to be kind of monolithic. You don't necessarily have kind of seed versus kind of early stage growth capital, etc. From a delineation perspective, it tends to be kind of one pot of venture capital, and that's a function of the size. I think there's also another function, which is something that's slightly different about South Africa relative to the US and other markets, is the extent to which private wealth is a big driver. South Africa is, a lot of the investment capital in South Africa tends to be institutional. So it's institutional pension funds rather than family offices, etc. And you'll find that in the venture markets of the developed world, a lot of the capital comes from family offices, kind of angel investors, etc. And that's kind of an element that still needs, I don't know if it needs development, because high net worths are not putting money into VC, or kind of it might be direct investments rather than through intermediated funds. But you know, there's a market architecture difference between South Africa and the rest of the of the developed world.
I think one of the things that we found within family offices and building their wealth is that they're investing a lot more in businesses but maintain that control. And, you know, I think in the past they would just put in some seed capital and hold a small shareholding, where that for now has changed, where they want control to make sure that they can drive growth, obviously for an exit date where they can actually realize proper value.
Yeah, and I think it comes back to the monolithic nature of VC in South Africa. I think you are seeing some growth in venture debt, where founders don't necessarily have to sign off control in their entities quite early on, during the growth phase of the businesses. And if you look at the international markets, venture debt is a much bigger part of overall venture funding. I think there's an element of risk aversion, which is probably why high net worths and family offices, etc., are looking to take on control of the various ventures they're funding up front, which is obviously a challenge for founders who'd like to hold on to a controlling interest in their businesses. So I do think as the market develops, there's going to be kind of a bifurcation and kind of delineation between various stages of capital raise. And hopefully it grows in such a manner that founders continue to retain significant shareholdings in the businesses which they get off the ground.
I think talking around, so I asked about geopolitics and the tariffs. How do you see that impacting on infrastructure specifically in South Africa?
I think, while the results of the tariffs are still to be felt, the areas of our business where there's potential concern are around, I think in the first instance, it's kind of the citrus market. And through one of our businesses, the logistics group, we're the kind of largest private terminal operator for citrus exports. That being said, the US market is a relatively small, I think less than 10% of citrus exports go to the US. That notwithstanding, I think obviously we're going to have to find a new home for that production. Similarly, I think the vehicle manufacturing industry, where kind of certain factories and logistics chains were built with the view to significant exports to the US, I think that will come under pressure. I'm not sure to what extent government tax concessions in the short term and maybe kind of finding new homes for such vehicles, which could require retooling, etc. By the vehicle manufacturers. You don't know what's going to happen in that front. So that's where my biggest concern is. It's the auto industry. From an infrastructure perspective, however, I think you'll find that the key minerals, critical minerals that South Africa exports are still exempt from tariffs, very smartly from the US as the importer of said minerals. So I don't foresee any kind of big shifts from a kind of ore export perspective, specifically around manganese and chrome, which are some of South Africa's large exports to markets such as the US. But yeah, it does create an element of uncertainty, and there could be a reticence to invest if the future is not too certain. But I do think from an infrastructure perspective, and infrastructure tends to be quite resilient, right? So I do think that infrastructure is, the impact and the sort of let's call it inelastic demand profile of infrastructure will withstand kind of the impact of the tariffs. In any case, we're operating at the capacity is not enough. So I do think that if kind of production or export to the US declines, there'll be other markets that take up that capacity.
I think if I look at South Africa and I look the African region specifically, there's huge opportunity from an infrastructure perspective. We know that we're failing on electricity and getting that to households. Like you said, the number of, almost 600,000 people don't have, I think you said 600 million people don't have clean energy. That's frightening that we live in a situation where that is the case. So huge opportunity to invest in something like South Africa, where we can build infrastructure around that. Any other specific areas that you guys are focusing on? And also if we can talk into the African region on what current projects look like.
Yeah, look, from an energy perspective, and I think I said earlier that you have to be smart about how you invest. Utilities are still problematic. So there's a problem with independent regulation in many parts of the continent. So you find that utilities set tariffs, or rather regulators set tariffs with a view to, let me call it, being successful in the next election.
Yeah.
So you don't want to raise tariffs too high. So as a result, you find that many utilities are technically insolvent. They don't charge cost-reflective tariffs, and they require government subsidies on an annual basis to remain afloat. What that does is it means that when you contract with these utilities, there needs to almost be a level of government guarantee.
Yeah.
And in many instances, when governments have kind of fiscal challenges, these government guarantees aren't met. So commercial and industrial is certainly the way to go from a power perspective, and kind of lighting up for the 600 million residents who don't have power is almost a positive externality from kind of the provision of this commercial and industrial power. So obviously power is being provided to a factory. The homes around the factory are likely to get electrified as a result. In terms of the other kind of macro themes I spoke about, I think with data centers, there's the increase in data sovereignty, for instance, where there's increased requirement to keep data local rather than have it stored in other countries. So there's big demand to build local data centers in country. Similarly, kind of to reduce latency, with lots of cables being built around the world, and for kind of effective low latency internet and data, data centers have to be closer to the areas of use. So there's going to be increased build out of data centers, particularly from cloud and kind of hyperscale users, the likes of Meta, Oracle, Microsoft, etc. So seeing lots of demand from that perspective. As a result of that as well, kind of the need for kind of fiber to the home to connect, and fiber to the office to connect users to these networks and these data centers is a big area for investment. Similarly, I think with the proliferation of 5G, what you're going to see is densification of cellular networks, and as a result of that densification, you'll need more mobile towers. Mobile towers are likely to get closer together with the proliferation of 5G, which is a big build-out opportunity for kind of the major network operators, and we stand primed to assist and partner with the big cell phone operators to provide that infrastructure. Renewable energy, I think I've spoken about. The other one is kind of logistics and port. We've recently invested in, we're building out a cold storage logistics business, mainly underpinned by the fact that food security is required on the continent. On a per capita basis, kind of frozen facilities for consumers on the continent is kind of very at the very low end globally. Kind of
when you
building out a
invest in
portfolio
these businesses, do you guys maintain some sort of control to ensure that there is an exit strategy at the end of the day?
Yeah, it's critical. I mean, if you are looking to exit, in the first instance, you're probably looking to exit to a strategic or another fund that wants to exit to a strategic. And it's critical that you have control over the business so that the purchasing party can pay and provide a premium for getting control over that business. So certainly kind of we look to have control or co-control and a joint up exit philosophy with whoever our co-investors are. It's critical, I think, in this industry. And also about, a large part of what we do is value add, and those levers to add value is really in the appointment of management, bringing in consultants, and kind of driving better production and more efficiency in the underlying business. And you can really only do that effectively when you've got control.
Absolutely. Obviously, a lot of what you guys do, there is political influence, and there could be policies that are put in place that you would need to then, have that conversation with the governments to, is there certain change that needs to be applied? Has that been a roadblock for you at all? Have there been any instances where that has been the case, or you've managed to drive policy change to get things done?
Okay, that's so there's two things. I think there's kind of at the business level, we try not to engage too much with policy makers directly, because we'd rather be part of a kind of a solid process where kind of the process drives outcome rather than negotiations or discussions with individuals.
Yeah.
And that kind of leads to kind of better sanctity of contract, etc., when it's really out of process rather than bilateral engagement with policymakers. Where we think there's a requirement for policymaker discussions, I think that it's more necessary to do that at an industry body level. So the likes of SAFCA are the sorts of entities where you can engage with policymakers to represent the industry as a whole. Similarly, we've got a number of kind of energy bodies who engage with government directly on behalf of the entire industry. So that's where we tend to want kind of engagement with policymakers to happen at industry level through industry associations rather than individual engagements from a company level. It just makes for a cleaner process.
Absolutely. So, Vuyo, you've studied overseas and you've done some modular learning at Oxford and I think Harvard. You did a course. Do you want to talk around that? Because I think it's important that people who are listening to this understand that learning is something that just continues, and you know you've done it your whole life. Talk through some of those learnings.
Yeah, I mean, personally, I've always been a curious person, so there's always a need to kind of learn more about interesting things. And that can either happen through reading, so I try to read a lot. In fact, my old age, my vision is going, so I tend to listen a lot more. Okay. So I'm kind of an audiobook person now rather than a reader. But I think kind of being in academic settings which are kind of world leading is something I've tried to do. So as you say, I kind of did a master's at Oxford. I've done the advanced management course at Harvard, and a number of other kind of postgraduate studies at leading institutions globally. And it's beyond the learning as well. It's also about network. Yeah. So you build a network of kind of international movers and shakers, people you can call on for advice on things, etc. And you're also at the forefront of where things are moving globally. So I think, it's important to have a team and people who are always focused on learning and improving themselves. And this is something we try foster in our team more generally. And yeah, I mean, look, I've always been sort of educationally ambitious, and these are the places I wanted to study when I was a kid. And thankfully, due to my career and opportunity, I've had the chance to take some of these opportunities on. And the truth is, you just have to go for it. If there's an opportunity to study somewhere you've always wanted to go, it doesn't matter how old you are. I'm almost 50, but I'm still studying. So
amazing.
I think,
I think that leads to, if I look at the unemployment rate within youth in South Africa, it's a sad statistic. So if I am matriculating this year and I'm wanting to get into something, what would your advice be for young South Africans? I know you sent 40 letters to different companies, and I think there are opportunities for youngsters out there on scholarship programs, and you just need to find out where they are and engage and put your best foot forward. But from my end, what would your advice be for people coming out of university? Should they be studying? Should they start working? What does that look like for you?
Yeah, I mean, look, my letters in a way started from a position of privilege in the sense that I was prepared to work for nothing. Yeah. But, I still got a job where I got paid. It wasn't much, but I think what's important though is being a go-getter. I think one thing I've learned in my life is that if you don't try for it, it won't happen. And the worst that can happen is somebody will say no. You just move on to the next thing. And that's really my advice is if you want to do something, I'd say go for it. From a studying perspective, I think you can always study. So if there's an opportunity to get into a career on day one, get into the career and you'll continue to improve yourself thereafter. So take the chance when it falls into your lap and go for it. don't take no for an answer. If you get a no the first time, go for it over and over again. Keep asking.
And I think South Africans, we're resilient like that, and we're okay to be told no the first time, but just keep fighting for that.
Yeah. And look, I think when you get no's, a lot of times it results in an element of dejection. But again, if you don't go for it, it will never happen.
And I think when you and I chatted before this podcast, we said, what do we want to achieve out of South Africa? And we want to build something great. We have an incredible country with so much to offer. And I think that's why the conversation with you was so exciting, because there's so much development from an infrastructure perspective where it can create jobs. Do you have any stats on that with some of the projects that you have been involved in, and just how much that has enhanced, the job opportunity and the job market within your space?
Ooh, I mean, look, I think, you talk about the cost to the economy. I think maybe to put it into perspective, and this is not necessarily jobs, but its impact on the economy, is I think the renewables that have been built out to date have sort of saved us 2 stages of load shedding when load shedding does happen.
Yeah.
And assuming that in the periods when there was load shedding, and in fact when we would have had load shedding had the renewables not been in place, for each stage of load shedding, I think you're talking 1.5 billion rands lost to the economy on a daily basis. And that's a crazy number from a jobs perspective. So I think there's kind of tangible benefit in that way. The projects we invest in have created kind of more than 10,000 jobs over the course of the past decade. Our projects have in kind of social spent more than 1.3 billion rands on the communities around them. So also, and in the things that matter, so kind of early childhood development, in creating job opportunities and kind of enterprise development in the communities within which they operate. So yeah, I have tons of ESG data from our businesses, but I do think it goes without saying that having proper infrastructure is a critical driver for kind of improved economic performance. And I think the projects that we've invested in for sure have had kind of an impact of multiples of billions on the SA economy to date.
Absolutely. I think that's the biggest thing, is that seeing that social impact on the communities for me would be a great win. Yeah. So Vuyo, when you're not working, I know you're a very busy man. What else are you doing when you're not reading and spending time with your family and kids?
Well, that's sort of everything. So yeah. The kids take up all the spare time. But I try to keep active. So I go to a boxing gym, for instance, and that's something I do 2 or 3 times a week. Really, if I'm not
and kids,
boxing and kids, I think that's my
consumes a lot of your time. When you've got young kids, I think it does consume a hell of a lot of your time.
Yeah, and then the work, which is.
What do you love most about what you do?
And this is the reason why I've stayed in it for so long, is every day is different. So no day is the same as the previous day. There's new challenges, new opportunities. I mean, just today we were kind of looking at, what you call it, attraction infrastructure opportunities. So things like cableways, etc. Of new sectors that I haven't looked at previously, which could be quite exciting as kind of new areas for investment opportunities. At the moment, this week as well, we're looking at the RFQ for South Africa's transmission project. So also kind of very exciting to potentially invest in transmission infrastructure, which has been neglected over the last 30 years in the country. So lots of new stuff we're looking at, getting our heads around it, finding new partners, and it's kind of these are
keep
the
networking
joys
and
of
finding the people to invest in the country. Absolutely. So, Vuyo, on that note, I just wanted to thank you so much for coming and sharing your story and your journey with me. I really do appreciate it. Lots of insights, and let's, they say make South Africa great with investing in infrastructure. So appreciate your time. Thank you.
Okay, thank you very much.
Awesome.